the last time that we spoke that you don't believe that the valuations permit great returns in India in the near term. Does that still stay?
So we were tactically bullish in March and we turned cautious end July.
Right.
And the reason for that, Neeraj, was not valuations, it was actually liquidity. Okay. And we've seen for the last 15 years that global equity markets react to injections and withdrawals of liquidity by the major central banks. Yeah. In March, the Fed injected liquidity for the bailout of the small banks. We saw the market start to rally, growth started to rally, mid-caps in India started to do well. Starting July, June, you started to see the liquidity withdrawal happen as well. And this is for a shorter term trade, our research has been very clear. Valuations are your second filter. The first filter is earnings momentum, which is then amplified and multiples by the liquidity phenomena. So will I be positive now? The answer is no, because we continue to see liquidity withdrawal by central banks happening for the next several months, right, which should put a lid on equity upside here on.
Sanjay, based on your assessment of what market returns are likely to be because of the overarching factor of liquidity, where is it that you still find comfort to be able to tell your investors at the conference that these are the pockets that you as a team strongly believe still have a chance of outperformance in an otherwise sideways to a faltering market?
Okay. So there are 2 or 3 answers to that question. Okay. If you have a longer horizon, so let's say you're invested in India and you have the patience to be in here for the next 3 to 5 years, then you still may find enough companies which are executing well, which have growth visibility remaining very strong, and therefore you may then be willing to say that, okay, maybe the multiple's a bit too high, but I'm here for compounding and this is good for me. But the problem is, Neeraj, that most of my investors think of the structural story and the demographics, but expect returns in 12 months, right? And that's the challenge. So if you're looking for shorter term return, then you have to necessarily worry about the market direction, which we think is negative, and we think markets will be flat to down for the next several months. In which case, the only hope you have is outperformance.
Right.
Right. So even in a down market, there's nothing that's going to sort of go up. Very, very few will go up. Within the large caps, the only space that continues to make sense, and this has confounded all strategists everywhere in India, is the banks. Okay. Because the banks have delivered earnings, they delivered earnings upgrades and are properly valued. It's like, all strategists in the world saying equities will go down. Every major strategist in the world thinks equities has a downside, but the market holds up. Same in India. Every strategist, every buy-side investor will tell you the banks looks great. The banks have struggled to perform. But if you were to screen the stocks credibly, that's the one space that makes sense on a valuation versus growth trade-off.